Alrighty, welcome, good morning, good morning. It is now 10:30. Start of our Bookmap stream, October 16th, 2024, Wednesday. And we just had a nice little dump and the big old pump. V recovery, baby. Back up to 230 or 350, which was my target on NASDAQ. I had a downside target of 230 or 228 on NASDAQ. We got down to 204. And I had an upside target of 350, which we got to 349. And to be determined if we're going to go higher here. All that was laid out by VPA, call activity, and Bookmap liquidity levels. Let me get the Bookmap stream for you. Bookmap 15 frame rate, boom. And we're live. We'll do it live. Welcome, welcome. If we're looking at the 15-minute chart, we just hit the volume node on the volume profile shelf. If you don't know what I mean, I will post to you a screenshot on NASDAQ. And it shows you upside resistance. That's the 15-minute POC, the 15-minute volume node for the horizontal histogram of the volume profile, which begins right at 350. It's also the overnight low range for the entire overnight session. So it makes sense that the NASDAQ would pump and hit 350 and then have a little bit of micro rejection here. If you're looking back on NASDAQ, which I'm going to show you, NASDAQ had on the move down liquidity building at 230 and then on down to 167. Now this was the major level. They had liquidity right at 239. I had a sweep built into 228, which is what put me on for about a 12-point sweep. They got down to 204, which is nothing in the world of NASDAQ. They bounced it back up, and as they bounced it, look what they did. Liquidity to the upside. And they're still building more liquidity up at 445. No major icebergs on the tape today. We had a couple at the open for ES. But nothing crazy. ES has its own level of liquidity to the downside. They approached it. They didn't fill it. They put some to the upside, filled that, and now they've added back down to 5842. So it's been a shaken and a bacon day. And I'll continue to watch the liquidity level shift here to point out any kind of movement in price. Let me look here. 326. Alrighty. Just looking. Okay. So 15-minute chart again. We've got this nice V recovery again, 325, 324. We've got the VIX rolled off 20.31 as now they're kind of having the ramifications of VIXpiration is starting to enter the tape here. Aggressive amount of call buying and put buying this morning. Put buying to the tune of almost 2 billion, and they sold all of those off. So a crap ton of put selling all the way back up. They've sold 2 billion. They bought 2 billion of puts and they sold them, and then they sold. They this morning they on the opposite side of the tape, they sold 800 million in calls, and now they have bought up 1.4 billion in calls. All 0 DTE, of course. So Hero is straight up. They have reduced all of the put leg that was on the iron condor at 5790, 5800, and now they are piling into the 5850s, 5845s on the calls. So on a move up, that will be my upside target for the S&P. I still have a downside thesis after today, so if we do go green, which I hope we do, that's when I'll start entering into my short-term swing puts. Where do you find that information? The options information? The options information, I use Spot Gamma to determine options flow and other analytics as well, but in that case, it would be the hero options flow. 58.73, we have 58.52 as liquidity down south, looking north. We've got a little bit up here at 58.88, but mainly we are back inside the range from the overnight session. They just dumped and pumped us. V recovered back inside the overnight range. If you look at the S&P, the S&P has been far less bearish than the NASDAQ. ES only rolled over like 9 points. NASDAQ got dumped a couple of 100 points, which is the same thing as yesterday. And it's because of the relative strengths in the market. The market overall is pretty dang strong today. NASDAQ and other tech-related environment was down. XLP, XLC, XLK, the 3X sectors that deal with tech or communication-driven option or names, are all down in red, now recovering. Everything else is bright green. All other 7X sectors that are not dealing in tech and communications are all bright green. XLF, VYEP, LMNO. LMNO, don't forget about LMNO. All green, and that's why the NASDAQ or ES is putting in a new overnight high. They're up to 58.75 and hanging out, and there's massive amount of 0DT call buying to the upside. And that's a good indication or a good way to determine whether or not your market awareness is keyed up or not. Having a good deal of market awareness will help you determine how strong of a downside thesis or upside thesis you want to play, especially if you're an index trader like myself. We trade S&P, we trade NASDAQ, and a plethora of other indexes every now and then. So if I'm trading ES and or NASDAQ, and I need to determine which one to trade, I have to look at market awareness. I have to look at, is the whole market participating in a bull rally, or a down rally, or down sell-off, or is it mixed? Which one do I choose? Yesterday, it was beneficial for me to short NASDAQ and not touch ES. Today, would have been beneficial to long ES early, and then short NASDAQ early. Is there any correlation between YM, NASDAQ, and ES? Yeah, of course. So the YM is the Dow product. That's where you're going to have the litmus of rotation. So the main way that I look at RTY and NASDAQ and YM and ES on the daily is rotation in and out. There's two scenarios on monitoring those market conditions. If you have everything correlating where the whole market's just dumping, that's where you get your 2%, 3%, 4% red days, where everything is just dumping, or conversely 2%, 3%, 4% green days when everything's pumping. When everything's correlated and the algorithms are just buying everything on a true bullish day, usually everything is working in tandem. If it's a back and forth V recovery, inverse V type of market, then usually you're getting rotational forces, which is a day like today. Today we saw everything green except for tech. They were dumping, taking profit takers, which is called disposition off of tech, and everything else is coming nice and green. And then we saw at the end of the day here, the second that tech started to rally here in the end of the morning, XLF and other X's began to drop, although they didn't sell off per se, but they did drop. A massive red candle in XLF to wipe out most of the day's green. And that's just a rotation back and forth. That's why we're not getting complete continued trend here one way or another. We just rejected 350 on NASDAQ. We just rejected this upside move to come back inside the volume node on the POC on ES, and we're seeing the recovery of the small cap names. So it takes a little bit of understanding and experience of getting into the weeds of things to determine how the market acts with one another going forth in the future. How does mega caps tie into the small caps? If you look at the daily chart and zoom out, or even the weekly chart, you'll see that the RTY has been grossly underperforming, while the Dow has been still rocketing to all-time highs. That's because the small cap is the RTY is to the S&P what junk bonds are to the treasury market. RTY is what you throw the rest of the crap in. You put all the tech into NASDAQ. You put all the blue chips into the S&P. You put all the industry and manufacturing in the Dow, because the American economy is based on industry and economy and manufacturing. And you put everything else in RTY, all the small cap crap, which is why RTY is a good test to determine how strong the economy actually is, because if the small caps are rocketing along with everything else, then most likely you're going to have a pretty good bull move and you're going to have a pretty strong test of the economy. Whereas in this case, everything else is rocketing. Well, I hate to even say everything else. The top 7 mag stocks of tech are rocketing, and yet RTY hasn't even come close to touching an all-time high in 4 years. Anyway, we are rejecting. That's a 90-point sell-off on NASDAQ. ES dumped back over here. And all they're doing is shaking and baking 0DTE options. That's what this is. The 0DTE options flow is crazy, but look at the liquidity. Crap tons of icebergs. They're still holding liquidity at 58.53 while pumping nothing else above. And they're adding liquidity, managing exposure. You see this? It came on. They added more exposure, and they shifted it a point down into 58.43. So that shows me we have interest to move the market down to 58.50 and 58.43. So if the indexes are moving in a unique way and not in a bullish trend with the whole market, what does that tell you about what you should do? Well, it depends. It depends. It depends on Fauci, where I want to trade, where I want to place my bet. For example, yesterday, the market was mixed, so the S&P was barely moving, whereas NASDAQ dumped almost 300 points, so I elected to short NASDAQ. So it all depends on where the pressure is in the market or where the support is in the market. If everyone's buying up tech and nothing else is moving, then I want to buy the NASDAQ, and vice versa. If I see rotation in and out of tech into the small caps, then maybe I want to play R2Y. So I want to place my bet where the institutional participation is. I want to be on the side of the institutions, not the retail, because that's where true volume is and true movement. If I'm looking at the X sectors, which is 10 X sectors in the S&P, and I see those half red, half green, then maybe I don't want to trade S&P that day. Maybe I want to trade NDX or RTY or YM, or maybe even go to gold and silver and oil, whatever else, or nothing at all. Large red candles here back inside the range. NASDAQ back over 250, and that is a 100-point candle on NASDAQ. These are ES prices, Nicholas, right here. Let's go take a look at the options. What is that saying right now? They're dumping calls all the way back over. They just went from, they just went from 900 million to now in negative delta territory. So they've sold about $1 billion worth of calls right there. And now they're back to buying puts. So they're literally whipsawing this thing back and forth based on 0DTE activity. And now they're liquidating this thing from 350 down to 250. RTY is dead flat. The Dow starting to round over a touch. The banks are flat, XLF. So there you go. The reason why I know this is 0DTE options is because if you look around the market, the big names aren't really moving right now. Apple, Nvidia, Microsoft, they're not moving. Amazon, dumped. Meta, not moving. Google, a little bit of red there. Tesla, of course, is still getting smoked, and I'm still bearish on Tesla, by the way. I think they're going to take out 219, 218 and drop. I'm still bearish on Tesla long term. ES just smoked the entire range. They're coming down to 38.53, and I would suspect they're going to fill this liquidity. So if you're currently short, I would remain short until at least a 58.52 touch. If you want to be super aggressive, I would wait for them to sweep the 58.52 and try to stop people out down to 46 or something. That'll get you an extra 4 or 5 points. But of course, as everyone who grew up in the 90s knows, don't go chasing waterfalls. Beautiful fall day outside. I'm pretty pumped because Andy just came out with the apple pie concrete. I love the apple pie concrete. Why can't I watch live? It says no permission. If you go to the verification tab, let me get it for you. I'll post it for you. Let me come up. Copy. Go go to the verification tab. It should only take you a couple of moments. I'll get you in. That's just Bookmap's way to verify that you're not a bot spammer. What's the ticker on Bookmap? This is ES, the S&P. Love the apple pie concrete. It's amazing. Here in Pinellas County, where I'm at, it's 68 and beautiful. Nice. I love it. The best time of the year. I always go back and forth to determine if spring or fall is better, but man, they're all amazing. They're both amazing, but I think fall is just... Message you and Ms. Oman Discord. My payment got declined beginning of the month and it got fixed. Yeah, I'll take a look. Shoot me a DM now and I'll make a note of it and I'll get it fixed for you. Fall is the best, spring is too wet. How exactly are you making your conclusion on how far the price is going to drop points-wise when you say targets like 5250, then go to 500? Because in my learnings and in my experience in the market seeks out liquidity. Liquidity is the blood of the market. Just like if you were to drain all the blood out of your body, nothing would work. You'd die. Your heart wouldn't pump, nothing. Liquidity is the blood of the market because the market cannot go anywhere, because if there's no liquidity, then you can't move anywhere. There's no buying, there's no selling, and that's all this is. You know, if you scrape off the crap on your charts and you've changed all the candles from red and green to just simply a bunch of numbers, all it is orders. Buying at orders and selling at orders. So if you could become philosophical or existential in your trading to kind of figure out that we get so sucked into seeing candles, a visual representation of the market, that you forget that all it is numbers. That all it is buying and selling. So if me knowing that is that the market has to participate by law, buying and selling at particular prices, then I want to know where those levels are. The market is going to seek out liquidity because knowing supply and demand and auction theory, that if we reject out a supply, the reason why we rejected out the supply is not because there's an 8 EMA there. It's because the buyers have found premium at which they want to sell the price. The algorithms that they've tooled in at their price, they are selling at a premium, and now they need to drop to start to find the next supply. They need to find, demand. They need to find the point at which they are now tooled to buy. And that's where they sell off, the price drops, and it continues to drop until it seeks out that liquidity. The way to monitor this stuff is you can go through level 2 data, you can go through order flow in the DOM, or you could use a tool like Bookmap that shows you a good visual representation of where that liquidity is. For in this instance, we have 5850, 5840, which shows a preponderance of orders at those areas. So if the market is going to go somewhere, then I'm going to opine that they're going to go to a particular level of support, which has a large amount of liquidity, which in this case is 5850 and change. Does it always work out that way? No, because we can't possibly guess where they're going to pivot randomly or all that kind of stuff, but it's all based on probability and likelihood. If the book is balanced, then most likely it's not going to go to anywhere except range bound. If the book is skewed one way or the other, then most likely we're going to head in that direction of the skew. And then I can also go back and look at historical price action, which is VPA, looking at bounces, rejections on the daily chart, monthly chart, weekly chart, where the market has in the past put in an area of support and resistance. Everything is derivative of liquidity. Everything. Every single system, whether it be anything, pick it. It's all based on liquidity. What is this? I feel like the president. I was just handed a note. Okay. Does that make sense? Fall, flannel, friends, campfires, college football, the 5 Fs. You forgot s'mores, the 6 Fs. S'mores. Is the apple pie concrete based on liquidity? Yes. How many of those I could buy and generate liquidity at their stores? They're fantastic. Did I tell y'all that they're voting on a banana pie, or a banana pudding concrete for 2025? Dude, if Andy's had stock, I would buy it. Love it. You're welcome, Dominic. I'm reading VPA now, Anna Colling. It's light bulbs going off on every page. I love it. Are you in the Discord? I'd love to go over notes with you. I've got a couple of copies of the VPA book. One of which I've actually hard mailed to a member. I had a book with a whole bunch of notes in it. I mailed it to him. But the current copy I'm using now, I've got a whole bunch of notes in it. It's fantastic because every time I go through this book, at least the meat and potatoes chapters, I get something different or new, an updated version of things where it makes a little bit more sense. It comes a little bit more clear. We're actually right now going through it chapter by chapter, and it's been awesome because sometimes teaching is the best way to learn, because me teaching this is allowing me to further identify concepts and understand things a little bit better. It's awesome. If you look at the volume profile now on the 15-minute, we're smack dab in the middle, back and forth, red, green. I hope this market goes green today. I know we're not supposed to bring in hope, but I hope it does go green, because that's where I can get a better entry on my swing puts. Walgreens is shutting down another 1,200 stores. Come on. Who doesn't want to pay $11 for a bottle of cough syrup? You can still see it be pretty bullish tilt early today. Yeah. Or here comes the green back up. 58.67. Unable to tap that lower leg yet at 58.50. CVD is pretty neutral at the moment, which means the aggregate is balanced. Tech is starting to have a little bounce here. Microsoft back up. And yeah, just back and forth. The 0DT options today can be identified as anything less than extreme. The amount of flow on the calls is extraordinary, both on the puts or on the options, both on the calls and the put side. The iron condor is still on the books. He's put the puts back on, so 5,800 and 58.45 are stacked. Stacked. That's why I'm saying after OPEX or into OPEX, we will have an unpinned move. As all those options generate and they roll off the books, they'll unpin volatility, and we'll probably get out of this range. In my opinion, down, at least temporarily. Who put an iron condor on? Some big jabroni. I don't know. Some big jabroni. There's a gigantic one though at those prices. My man's still trading. I haven't stopped by. Oh, nice, Mr. Perfect. Welcome back. Yeah, it's been a fun 3 years, man. It's been a fun 3 years. Glad to have you back. I remember you. Yeah, I remember you. I'm curious why you're looking at swinging puts on the market. The market has been a very, very dull phase for a long time. We're starting to see an uptick in volatility. If you look at the daily chart, we have, obviously everybody and their mother sees this big ascending wedge that's on the chart. If you go back and look at the daily chart and plot the highs from July until now, we have a very aggressive, very strong, and delineated ascending wedge. That's just the back burner stuff. In terms of VPA, we've had very low volume since volume fell off a shelf on September 19th. September 19th marked the drop in volume on the market. And it makes sense because the price action also shifted on September 19th after that, and we entered this low volatility sideways chop that went from very tight ranges, top wicks and bottom wicks, very poor trading conditions throughout the whole process. Since September 19th, which is going on a month now, just shy of a month, we've had one day where we had an influx of volume, and that was on October 1st, which was high volume sell side action. We drifted back higher. We had engulfing candle 2 days ago, and then a sell-off candle yesterday with another influx of volume. Now, to further compound that is that the unique conditions of this market has been as such that it is difficult to read from an IV perspective. On one hand, we have the VIX has been over 20 or over 19 for a long time now. So we've had a very high VIX with very tight price action, which is throwing people for a loop. Usually when you see the VIX at 19, 20, 21, 22, we get a lot of crazy price action. But here we are sitting with the VIX now at 20.35 and has been there for a while now, and the price action simply isn't moving. Yeah, we've had one green day yesterday, but it was reversed. Now we're finally starting to see a little shift in volatility. However, the short-dated IV and the short-dated price action is very small, very tight. So we're faced with this environment where we have long-dated high IV and short-dated low IV. And the reason why that's happening is because they're buying long-dated puts for protection, and they are buying short-dated 0 DTE calls because the market environment now is conducive for that. So if we know anything about the VIX, which is a 27 to 32 day derivative of option chain positioning, hedging of the market, we know that the reason why the VIX is elevated over 20 and not moving the market is because we have long-dated protection on. Well, why do we have one month out protection on for the VIX? What happens in a month? Two, arguably, of the most significant events in your life, depending on how old you are. We have one, the most contentious election on the books coming up here in about 3 weeks, immediately followed by the FOMC rate cut decision, which arguably is one of the most important rate cut decisions in recent history because we just cut 50 basis points 3 weeks ago. Nothing is moving like we cut 50 basis points or supporting the fact that we should have cut 50 basis points. So everybody is anticipating the decision on the FOMC, which is right at the election next month. So we have two major events. That's why a long-dated IV is high. So all that to say, the market doesn't really know what to do here. We've got that long-dated puts, which is going to remain on the books until we have a decision. When we have a final outcome from the election and we know what's going to happen, we'll have another release of volatility, and either someone's going to double down on those puts from that after the election because something's going awry, or they're going to close all those puts. VIX is going to dump, and the market's going to rock 6,100. But that's still 3 weeks away. So until then, I don't see a scenario where we're going to have a major outlier move here, simply because they have to remain high on the they have to keep VIX high. They have to keep the positioning relatively high because there's still way too much unknown coming up in 3 weeks. The market has no idea what's going to happen with the election and or the FOMC decision, so they have to price in a level of uncertainty, which is going to have a higher level of IV. So they can't roll off the VIX and they can't rocket the market. They could slowly continue the slow grind up here by buying zero DT calls that we've been experiencing, but the major, rocket ships, that's not going to happen until at least after the election. So in my thesis, based on the amount of volume and sweeping red candle we had yesterday, I think we're going to face a short-term, small retraction back down to mid to low 5700s, and that's where I'm going to play it. I think tomorrow's OPEX is going to roll all this exposure off the books, including the iron condor that's on the books from 5850 down to 5800. I think that'll roll off the books. I think we'll have a little bit of shaking and bacon here, back down to mid to upper 5700s. Nothing crazy. That's why the swing put I'm going to put on is going to be between a 5 to 10 day exposure, anywhere between 50 to 60, maybe even 100 points out of the money. Nothing crazy. The only way that will change is if I see an extreme amount of sell volume. If I see a level of volume that is on par with what we saw in early August, then I'll play a longer date put, maybe a 6 to 7 week, 10 week output. But I can only make that decision if I see the environment on the VPA. Right now, I only see grounds for a small retraction back down to 5700, 5750. Does that make sense? You're welcome, Patrick. When you say 5700, 5750, are you referring to ES? Yeah. It's not that far down. It's only 100 points down. It's not that big a deal. I mean, look what happened today. I've even had retailers, I'm sorry, not retailers, realtors. Holy crap. I've even had realtors talk to me over the past couple of 8 months and say that everyone's waiting for the rate cut to happen so they can start to buy homes again. Because what happens, what do you suspect will happen when they cut rates like they did last 3 weeks ago? Rates are going to come down, mortgages are going to come down. Where are the yields at now? The 2 years about to pop 4% again after they cut 50 basis points. It's a clown show. So the market doesn't know what to do with it. They're pricing in uncertainty. Once the election and FOMC comes out, VIX drops from the uncertain becoming certain. Would that be able to push the market up if we have the right economic? Absolutely. That's after the election, though. That's why I'm saying I want to get my puts closed before the election. I don't want to carry any exposure through the election. Because regardless of the outcome of who, getting into who you want to win and what the market wants to win, all that stuff, aside from the fact of who is best for the economy, simply the event of the uncertain becoming certain or the unknown becoming known, that will drop IV, that'll drop hedges, and that will make the market go up. It's not to mention the fact that we're entering the Santa rally environment of November, December, which is traditionally a bullish environment. So with all that compounded, with all of the hedges rolling off when we know who the candidate is going to win, I think we'll have a rally. I don't know how big, but I think they'll have, simply because of IV rolling off. And then after that, once the smoke clears in January, February, the market will begin to price in who they think is the better for the candidate, or if it's a wrong decision or not. And then on top of that, we've got the FOMC rate cut decision the same week. Oh, man. But go look on the daily chart. Go look on the daily chart. This is, yesterday and today, or yesterday and the day before, are the only real good candles we've had with volume in weeks. just took 578 puts for Friday. I want to see Head and Shoulders in the hourly play out. Nice. I like it. 58.63. All right. 58.62. So we're back and forth, shaking and baking. We see NVIDIA hasn't moved at all in about 30 minutes, or even all day, really. Apple hasn't moved at all since this morning. Microsoft is slowly kind of creeping back up here. XLF is flat. Just a lot being going back and forth. It's going to be so exciting when I can fully understand everything you say and explain on the fly quickly so I can swiftly make trades and be able to understand the market more. I have a lot to learn. That's all right. How long have you been trading, Fauci? Do I play earnings at all? Not really. Not really. I used to play them when we were putting on when Netflix was putting on 30% moves, but not really. I find my win rate for earnings like that is pretty low just because it's more of a gamble. Trade ER with futures is nice. Yeah. IV will kill you on earnings. Exactly. Yeah. When you got high IV, not only do you have to be right, you have to be super right. Like when Shredder takes the ooze and becomes Super Shredder. $58.63. Yeah, so we're just kind of back to chop here. Not really much to narrate. We've got liquidity zones up and down. We've kind of done the recovery there. We still have overall arching liquidity at 58.52 on ES. I would make that a likely target on drops at 58.42. But the question is, though, how does the macro market roll over and fall when everybody's expecting it? like wrapping plastic. Isn't it expected for 3 years already? I would say 2022 expected a lot, but it's been a nutty market, man. It's been a nutty market. Down at 58.52. Currently no longer actively trading. We're about to call it a day here in about 20 minutes, 19 minutes. And we'll just kind of wrap it up and put it out to pasture. Very interesting day, though. At least interesting morning. Now it's just kind of chop, but XLF ain't moving. Nothing's moving at the moment. Bonds are putting on another green day here, 25 and change or 95 and change. Yields are back off as 2-year now once again approaches the 4-year mark. Not going on. 58.69, a little bit of green up there. It is now 10.15. What's the euro market doing today? Euro market is up 1.15. So it's a very strong euro. Oh, man. I've been trading for years. Used to trade widely with high risk. Made a lot of money. Lost a lot of money. Tried a few different strategies. Traded purely off intuition. I've been watching your channel for a while, off and on, and looking to hone a VPA strategy. Seems to make the most sense. Nice, Dominic. Thank you. Well, I think you're on the right track. VPA changed my life. It's changed a lot of people's lives in the server, and I think it could do wonders for you. If anything, it'll give you a good foundation to build a system on. That's something other than intuition. It'll give you something of tangible to make decisions on. Do you have a specific number in mind for judging higher or lower volume in relation? Not a specific number. It's all relative. It's all about environment. Are we in a high volume environment, low volume environment? Do we have an influx and outflow? Do we have super high, super low? Because that's what I need to know. It's about relative participation. Do we have a period of low volume where the institutions are starting to participate, where high volume is going in, or the other way around? Do we have a high volume environment where these institutions are starting to shut it down and not trade anything, and the volume goes away? And then, of course, the direct representation of volume and price. If institutions are shutting it down, you're looking at summer kind of price action. Yeah. Yep. A little bit of green here. I need a good fridge. Anybody recommend a good refrigerator? Haven't decided on a refrigerator yet. Quick question: how many years of this kind of price action do we reckon we'll get in this market? You talking about this volatile stuff? I don't know. I definitely don't think it'll be forever. I think probably the next 18 to 24 months worth. I don't know when that'll happen, but when the rate cuts, when they have to do an emergency rate cut because the economy and market is crashing, that's when this will stop. Well, soon after that, because what will happen is that I think we'll get a pretty significant sell in the market. I think the economy will start to really feel some pressure. There'll start to be some job losses or even more job losses. They'll have to come out and do an emergency rate cut, and then we'll have a big bounce in the market. And then after that, back to 2018 to 19 style price action even before that. And then the upside of that, though, there's a trade-off. Yes, we'll get the ability to scalp and do this futures trading will go away. You'll completely waste your time trying to scalp 5-point ranges every day. The flip side is that it'll be now a real ongoing bull market. We'll enter into a 10 to 15 year bull market. There'll be some chop and sideways days and maybe a red year or two, but overall we'll enter a nice little trajectory upward bull market like we always do. And that's where you can start layering into a crap ton of the S&P. You can start buying stocks, putting together a healthy stock portfolio, and forget about scalping. And now you can start making money on covered calls and cash secured puts and shorting VIX futures, which is a great strategy in a contango bull market, and all this fun stuff that I've been doing for years. Dollar cost average and forget. It's good stuff. Good stuff. If we break 350, 360 on NASDAQ, would you find 411 plausible? Oh yeah, that's only a hop, skip, and a jump away here. If we take out 350, 360, I'll be looking for... First, we have to test 400. And then maybe even 450 would be my next target. But so far, we got to get up there and break it. Right now, we're in a sideways pennant, which is a consolidation pennant. Would be nice for them to short that again. Yep. So 58.60, 58.55. Looking at the options flow here, things are dead flat. Call buying, put buying, selling or buying calls and puts are dead flat right now. Do you think we'll go to upper 400s anymore in a legitimate drawdown after this upward movement we had? Do you think we'll go to the upper 400s anymore in a legitimate drawdown? Are you talking about today only, like today's session? Well, Yeah, we did have a nice drawdown this morning, but we bought it back up. And right now, if you look at, we're just going to have a consolidationary pennant here. Volume is dissipated, price action is dissipated, and we're pinned, which, does lead to expansion. Right now, we're in range contraction, and pretty soon we'll go into expansion. And I don't know if that'll be today or tomorrow. I do think it'll be either today or tomorrow. If I had to guess, my money would be on tomorrow or sometime overnight. Most likely is what will happen. Probably around European Open, we'll begin to do some sort of dump and drop back over. I think today, as long as they don't dump it too early, I think today would be a great target to put on a short-term swing put. SPY upper 400s. Oh, you're talking about when we start to draw down, do I think on SPY? Oh yeah, absolutely. History says that whenever we enter into a rate cut environment, we enter between a 25 to 35% drawdown on the S&P. So if that were to occur, what's 25% off from 580 right now? That puts us at 435. 25% drawdown from here is 435 on SPY. If we go to 35%, we're talking 375. But that's long-term stuff, though. Long-term stuff. Seems like a very solid foundation, for sure. How can I join the Discord? Is there any other materials you're just looking into? You join the links down in the description of the video. So if you go down to the link, you can click on that, or you can go to the Discord link there, or you can go to theoptionsmillionaire.com, and you can sign up there, and make sure you sign up with your Discord access so it automatically links. But yeah, in terms of other resources, of course, you've already got the VPA book. I would encourage you to go to my YouTube channel and watch the interview between me and Anna Colling. I did an interview with her last year, and she gives a lot of great insight into the market. Watch that video. Follow her Twitter account and read her analysis she posts every day. Great stuff. And then after that, start to work. Once you start to work on your VPA stuff, you need to start working on your emotional side of trading, which I think is just as important, if not more important. Is you can have a great system, but if you can't execute based on a rule-driven system, you're never going to be able to make money. For example, when not to trade, when to trade, how many trades to take per day, what happens when you lose, what happens when you win, etc. So start to tune up your emotional side of trading. And honestly, again, I'm going to be making a podcast about this, but that goes in anything in life. And I think it's very rare for me to see someone who is undisciplined in life and a crap person in life be a successful trader. So if you want to get better at trading, then get better at everything else in life too. Jump on the treadmill, shed some weight. Be a more intentional person, because that's going to bleed over into your trading. When you have a calm mindset, when you have a calm approach to the markets every day, you're going to trade better. If you have a chaotic life, it's going to be very difficult to have a calm demeanor when you're trading and a very analytical approach to trading. So it all works in tandem. Clean up your life, clean up your trading, clean up your approach to trading. You'll trade a lot better. Start your day off with a workout. Get your blood pumping. Squat heavy, do heavy deadlifts. That is financial advice. You only find freedom in those areas of your life where you also develop discipline. 100%. If you have no discipline, you have no freedom. Part of becoming a healthy man is to develop discipline. And you have to start by that, but with what you eat. You know how hard it is to have discipline with what you eat? Yeah. Anyway, we're getting philosophical now. 5 minutes to the end of the stream. Tacos. 580. Breakout or up or down? That's the question. That's the question. There's not too much to go off of a move here. Options flow is flat. Liquidity, you would say down. If I had to guess based on liquidity, I'd say 58, 53. Three minutes. Then we're going to wrap it up. Obviously, there's not much to trade here at the moment. And I'll be, once again, just like yesterday, I'll be posting an update on the trade once I execute. We will see. NVIDIA? What's NVIDIA doing? They're flat. RTI was the only safe index up for us today. Yep, it's still holding up there. Large green move on RTY and holding. All right, there's 11:30. Back and forth right there. So, yeah, no trades taken during the hour, but took some trades this morning. Other than that, not much to say. Right now, the book has liquidity down to 58.50. I'd put my target there. Options flow right now is dead flat. Nothing going on at the moment. And we are settling for Vixpiration shakeout this morning. And, of course, tomorrow kicks off OPEX events, which I think will result in the downwards action. If you have any questions about anything, hit me up in the DMs. Shoot me a DM in the Discord and come over and join. Or if you're already in, same thing. Hit me up with a DM and ask some questions. Don't get chopped up in the afternoon. The past 3-4 weeks, it's been very beneficial to trade the morning and then get out in the afternoon and don't even touch it. It's continuing to prove accurate. So do yourself a favor, get away, and go enjoy your life elsewhere until tomorrow morning. Hope you have a good rest of the day. I'll see you next Wednesday for the next Bookmap stream. And then, of course, tomorrow back in the Discord server. Until next time, I'm out.